Hello everyone, this is Doc from the Wealth Boardroom. Welcome to the channel. Today, we're diving into the world of tax liens and how they can be a powerful tool for wealth building. So what exactly is a tax lien? In essence, it's a claim by the government against a property due to unpaid taxes. This could be because of delinquent property taxes, income taxes, or other types of unpaid taxes. When taxes remain unpaid, the government has the legal right to place a lien on the property. This lien gives the government the authority to recover the owed taxes by selling the right to collect on this debt. And that's where you, as an investor, come in. By purchasing these tax liens, you essentially step into the shoes of the government, acquiring the right to collect the debt along with interest. Understanding tax liens is the first step towards leveraging them for wealth building. Now that we understand what tax liens are, let's dive into the benefits of investing in them. Firstly, tax liens can yield high returns. This is primarily because the interest rates associated with them are often higher than those of traditional investments. In some states, the annual return can be as high as 18%. This means that if you invest $1,000 into a tax lien, you could potentially earn $180 in interest over a year. Secondly, tax liens carry a relatively low risk. This is because they are backed by real estate, which is considered a tangible asset. If the property owner fails to repay their tax debt, the investor has the right to foreclose on the property. This provides a level of security that many other investments do not offer. The third benefit is the potential to acquire property at a fraction of the cost. When you purchase a tax lien, you essentially step into the shoes of the tax collector. If the property owner is unable to repay their tax debt, you have the right to foreclose on the property. This presents an opportunity to acquire real estate well below market value. Let's not overlook the fact that tax liens are backed by real estate, which adds a significant layer of safety to this type of investment. Unlike stocks or bonds, real estate isn't as susceptible to market volatility. Your investment is secured by a physical asset, and that's a big deal. Another advantage is that investing in tax liens doesn't require a large amount of capital. You can start investing with a small amount of money, making it an accessible investment option for many people. Finally, tax lien investing can be a great way to diversify your portfolio. It's a unique investment strategy that operates independently from the stock market, making it a good hedge against market volatility. Investing in tax liens can be a lucrative venture if done correctly. So remember, like any investment, it's important to do your research, understand the risks, and make informed decisions. With the benefits in mind, we must develop effective strategies to invest in tax liens. Let's dive right into it. Our first strategy is thorough research. It's crucial to understand the property you're investing in. Is it residential or commercial? What's its location and market value? Remember, you're not just buying the lien, but potentially the property itself if the owner fails to pay their taxes. So knowing what you're getting into is vital. Next, we must understand the local laws and rules. Each jurisdiction can have different regulations around tax lien sales. Some may have a bidding process, others might sell liens at a fixed interest rate. It's also important to know the redemption period, which is the time the property owner has to repay their debt before you can take action. Understanding these nuances can help you make informed decisions. Now let's talk about due diligence. This is the process of verifying all the information about the tax lien and the property. It includes checking for other liens or encumbrances on the property, verifying the property's condition, and ensuring the accuracy of the tax records. Due diligence might seem like a lot of work, but it's a critical step that can save you from potential pitfalls. Finally, remember that patience and persistence are key. Investing in tax liens is not a get-rich-quick scheme. It requires time, effort, and a good deal of patience. But with persistence, the returns can be substantial. So, to recap, our strategies for investing in tax liens include thorough research of the property, understanding the local laws and rules, conducting due diligence, and exhibiting patience and persistence. As an investor, your goal should always be to mitigate risk and maximize returns. And these strategies are designed to help you do just that when investing in tax liens. A well thought out strategy can be the difference between success and failure in tax lien investing. So take your time, do your homework, and approach tax lien investing with a clear, informed strategy. Happy investing. Now we're ready to find, we'll see it, tax liens. But where do we start? Well, one of the most common places to look is at your local county auctions, which may be held either in person or online. In many regions, these auctions are public events where anyone can bid on tax liens. The county government usually holds these auctions to recoup unpaid property taxes, so you're essentially stepping in to pay those taxes in exchange for the lien. But remember, it's not as simple as just showing up and placing a bid. You'll need to do your homework, researching properties and understanding the ins and outs of the local real estate market. If going to a physical auction isn't your style, or if your local area doesn't hold them, fear not. The internet has made it possible to buy tax liens from the comfort of your own home. Several online platforms have emerged in recent years, offering a marketplace for tax liens. These platforms provide detailed information about the properties, the amount of tax owed, and the bidding process. However, just like with local auctions, it's crucial to do your due diligence and research each lien thoroughly. Lastly, there are companies that specialize in tax lien investing. These firms do the legwork for you, identifying potential liens, doing the necessary research, and even managing the collection process once you've purchased a lien. While this can save you a lot of time and effort, you'll typically pay a fee for these services. So, it's important to weigh the costs against the potential returns. In all these avenues, research is paramount. This can't be overstressed. You need to know everything about the property, its valuation, the neighborhood, and any potential issues that might affect its value. It's also essential to understand the laws and regulations that govern tax lien investing in your area. Finding the right tax lien requires patience, research, and a bit of luck. So take your time, do your homework, and with a bit of persistence and savvy, you might just find a tax lien that can bring a significant return on your investment. Once you've found a promising tax lien, it's time to add it to your portfolio. So, you've identified a tax lien that looks like it could be a smart investment. What's next? Well, the first step is to purchase the lien. This is typically done through a public auction, either in person or online. You'll need to register in advance, so make sure to check the specific rules and requirements of the auction you're participating in. Once you've successfully bid on a lien, you'll need to pay the auction house. In most cases, payment is due immediately, so make sure you have your finances in order. The good news is, once the payment is cleared, the lien is yours. But don't kick back and relax just yet. After you purchase a tax lien, you'll need to manage it properly to maximize your return on investment. This means regularly checking the status of the lien, ensuring that the property owner is aware of the lien, and taking necessary steps if the lien is not redeemed. Adding tax liens to your portfolio can do wonders for diversification. Unlike stocks or bonds, tax liens aren't correlated with the stock market, which means they can provide a buffer against market volatility. They also offer a high potential return, with interest rates that often exceed those of other investments. But remember, diversification doesn't just mean adding different types of investments to your portfolio. It also means spreading your investments across different geographical areas. So consider investing in tax liens from a variety of locations. And finally, let's not forget about the real endgame here, building generational wealth. Tax liens, with their potential for high returns and stability, can be a powerful tool in your wealth building arsenal. They can provide a steady stream of income, and in the best case scenario, you might even end up owning a valuable piece of real estate. Adding tax liens to your portfolio can significantly enhance your wealth building capacity. So, why not take a closer look at this often overlooked investment opportunity? You might just find it's the missing piece in your portfolio puzzle. Investing in tax liens can be a game changer for your financial future. We've journeyed through the intriguing world of tax lien investing, unraveling the potential benefits it can bring to your wealth building strategy. We've shed light on the significant returns, government protection, and the possibility of property ownership that make tax lien investing a compelling option. We've also delved into effective strategies, highlighting the importance of research, due diligence, and patience. We've shown you where to find tax liens, from county auctions to online platforms, and discussed how to seamlessly incorporate tax liens into your investment portfolio. Remember, like any investment, tax liens come with their own set of risks and rewards. It's all about understanding these dynamics and making informed decisions that align with your financial goals. Thank you for joining me in the Wealth Boardroom. If you found this information useful, please subscribe to the channel for more wealth building strategies. Until next time, this is Doc signing off.